The next term, which your investors care about a great deal, is CoC, or cash on cash return. Anytime you want to buy a multifamily, your investors are going to say, what is my cash on cash return? So let's calculate that. The cash on cash return for the entire property is your down payment plus your closing costs plus your acquisition fee if you're charging a fee to your investors. And your cash on cash, and that's considered a term called all in cash. That's the total amount of cash that you invested. So your cash on cash is your net operating income less your debt service divided by this all in cash that's up here, right? So let's take a look at this example. Once again, 10 million purchase price, annual income 1.3, your expense is 500,000, your debt service is 480,000. Now in this case, your down payment is 25%, therefore you're investing 2.5 million. Your closing costs are $100,000. Your acquisition fee, a very generous acquisition fee you're paying yourself, is $500,000. Therefore, your total all-in cash is right here. Down payment plus closing fee plus acquisition fee, 3.1 million bucks. So to calculate your cash on cash return, you would go back to that NOI, 800,000, minus debt service, which is $320,000. And then below that, you would have the 3.1 million. Well, your cash on cash return, also known as simple cash return for this property, is 10.3%. Now, you do not want to tell your investors that you're giving them 10.3%, because keep in mind, typically you would claim some percentage of this. So the net CoC for investors would be a lower number than this 10.3, because typically 10%, 20%, or 30% of this cash flow is going to go to you if you're actively buying a property using someone else's money. Now, if you are the only investor, obviously this is the number that applies for you. Let me take a question here. What about CapEx? Should we use it, add it to calculate cash on cash? So the short answer is yes, you should be adding CapEx in. There are two schools of thought on that CapEx should not be used to calculate cash on cash, simply because it increases the value of the property. I do like increasing it in there. So you look at some of the formulas in the web, they don't have it in there. I would suggest, Rama, that you do include any CapEx that you're spending on your property towards your all-in cash. So yes for me.